All right, and welcome back for another episode of Carnivore Trades. Today is Thursday, October 13th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Definitely encourage you to do that. Making a killing here in this market. On the short side, this morning closing out almost all of our short positions here this morning, adding to an absolutely already killer year. So definitely encourage you to get involved in that, especially if you're having trouble trading this market, which a lot of people are this year. It is a volatile market to say the least. If you guys didn't catch the video earlier, I kind of went over the volatility, but I'll kind of reiterate again and go over that. So we had a little bit of dovishness from the BOE this morning, and that kind of caused the market to front run CPI a little bit, which was a perfect setup for bears. And the CPI came in really hot, much hotter than expected. We jumped out all the way up 3640 here on that initial pop, all the way down to just above 3,500 there. There was a pretty large order right at 3,500, by the way. They front ran it and got in before that order was filled. And the short squeeze was on from there. I tweeted this out, I was tweeting out things all day long. But ever since you got above that 260 handle, and I'll just show you guys that on the triple Qs there, that was the level of interest to me. You see we gapped below that, obviously. But ever since we got above that 260 handle on the intraday basis, that pretty much guaranteed that you're going to have that squeeze and at least get back to the gap fill this morning. And obviously we've far exceeded that. But you can see there from that E-mini chart, the volatility this morning was just tremendous. But that 260 level is the pivot low from 2020 back in September. We got above that on the Qs. And of course, we have squeezed pretty nicely into the close here. Now, I want to make this clear here because I know this is a crazy volatility, and it is a monster up day, a huge win for the bulls right now. But I don't believe this is the bottom, believe it or not. And I know that this looks like a massive, technically, from a technical standpoint, this is a monster bull reversal with heavy volume there. You see over 100 million on the triple Qs there. If we look at the spiders, we can get the spiders to come up. There we go. So spiders, over 100 million, 135 million there on the SPY. And look at that outside candle here, engulfing the last 3 days of trading, even with the gap down. But still not crazy. It's not the heaviest volume we've had all year. Not even heavier than January 24th or February 24th for that matter, or even, sorry about that. Not even the June lows. So we're not even above, these levels here or end of quarter. So the volume, it's definitely indicative of what you see near a low, possibly a low. It's not as high as you'd like for capitulation, though. And the market has to capitulate for it to be a bottom. And it's, some people will say, well, no, it doesn't always have to do that. It does. That's what has to happen. Human nature doesn't change. Now, you can put in significant pivot lows, but I don't believe this bear market is over. And if we take a look at the VIX never spiked up past 35. So that's another red flag. If we had blown to 38, 40 on the VIX today and then put in this reversal, then I'd say, yeah, you have a good case, a really strong case that the market has put in low. But it wasn't. The VIX was red all day long. And even now with this, nice little surge here in the last couple hours, the VIX is actually trading off the lows. So there's still some hedging going on out there, maybe smart money holding onto those hedges. So I don't think this market is out of the woods. Now, that's reason number two. This is the really big one, and it's the only one you need. This is the only thing you need to look at right now, and it's the 2-year Treasury. The 2-year Treasury is still down 37 basis points as we speak, and it's actually fading as we speak. So we rallied back up to that 10-minute 50 moving average, and we've faded all the way off of that really ever since. Why is that significant? Because it's telling you that this is a mechanical rally, a short squeeze rally. It's an implied volatility crush, whatever you want to call it, gamma squeeze. But this is not a fundamental low here. By the way, market's closing right now. So there's the closing bell. So spiders closing up 2.6%, Qs 2.35. Again, another thing that I was just going to get into next here. But the 2-year Treasury has to be bottoming and it has to be surging to the upside. Otherwise, this is not a low. 10-year Still finished green, did finish off the highs, but you need that 2-year to really reverse. So there's the 30-year as well, up 1.24% on the day. So yield's still up. That's telling you that this is just the dumb money shorting the lows, getting in too late, trying to short the whole this past week, and just being overhedged into CPI. So if you ask me, this is just a mechanical rally, and it's a power one. Don't get me wrong. This is a power bid, power win for the bulls, but that does not mean that the low is in here. And I still think we can reverse this and fade this. Now, you guys might say, oh, well, there's just a you're just an angry bear because you didn't cover. No, I covered. I covered this morning. I have my core short position left, and that's it. And it's not a big one. It's one I've had for months now. So it's not like I'm saying this from a place of anger or a bias. I'm in mostly cash right now. It's just so you guys are aware of that. Now, if I am wrong, I'll be the first to tell you. But I don't see this being a low currently. It may be a short-term low. But right now there's reasons here. By the way, what I was just going to get into, if this is a low, why is the triple Qs down? Why are the triple Qs up less than the spiders? That's not really what you want to see here. The Dow was the number one index today, up 2.84%. IWM, Russell 2000, up 2.5%. But the triple Q should be leading off the lows. Speaking of tech, why is ARK red? ARK closed red today. So risk on, right? Risk on. If we're having such a risk on, if that's the low, that means that we have the most amount of upside risk, right? If this is a multi-year low or anything like that, that would mean that we have the most amount of upside risk, correct? Then why is ARK still red on the day? Why is the 2-year not green? Not even green. It's actually on. It's actually still fading as we speak here towards the lows. So near the lows of the day now. But these are the questions you got to ask, and that's what I'm here to do, is to help you guys get to the bottom of this. Now, it doesn't mean we can't rally up. And again, if I am wrong, then we put in a low for probably the next 3 to 4 months. So that's my, I'll just tell you that right now. But I don't think that this is necessarily the low, and we can fade this. The geopolitical problems are still there. The 2-year Treasury is telling you that the market's still concerned about inflation. To me, this is just hedges getting caught with their pants down. And it's an epic squeeze. I mean, this is definitely one of the craziest days I've ever been a part of trading. Made a killing today. It was awesome, but just be careful here because everybody's going to be calling the bottom right now. And they've been calling those same people have been calling the bottom at June. They called it in May. They called it in February. They called it in January. So be aware of that. But let's just take it for what it is. Epic rally, awesome volatility. I love this market. I love the volatility. It makes for great trading. Again, I seriously encourage you to come find me on Carnivore Trades. We're killing it this year. But anyways, let's look over here at the market. So we talked about the indices, the triple Qs here, basically closed at the June lows. And really the same thing with the spiders. You got above that by the end of the day. We'll see how it reacts to this trend line tomorrow and that daily 20 moving average. That has been resistance here going back to August. So, it is a power move, but we also just rallied literally 15 handles on the SPY. So market may be a little tired tomorrow and might not be able to get through that currently. But we'll keep an eye on that for tomorrow again. And then the triple Qs, same thing. So we're watching that 20 moving average there on the daily, which has been resistance here moving forward. Russell 2000, same kind of deal, but the Russell has been a little bit stronger than the rest of the market. So, maybe the Russell can get back up to that 178 handle after all. Definitely can't rule that out. And that was the level I was giving out to you guys. Really, actually, we can go back because this actually kind of goes back to this area right here, 177, 178. That's the level I was looking for it to get up to last week, and we never quite got there. So we'll see if it does so here moving forward. Again, let's just take it one day at a time, and just a big rally here. And then the Dow, obviously, a big move off the lows as well. Again, just above that 20 moving average. Makes sense though that the Dow is the strongest. It is more, of a safety asset. And again, I really want to see the NASDAQ leading if you're going to convince me this is a bottom. But again, one day doesn't make a trend. Anyways, let's move on to some other sectors. Another little micro red flag here is the semiconductors. So we had a beautiful move off the lows, and he never took out the highs. So we had a nice squeeze, and semis couldn't make the highs. Now, it's still bullish consolidation on the hourly. But, you see the triple Qs, the spiders, the Russell, the Dow also making highs intraday, or all 4 of them making highs intraday. The semis did not really follow through. Now, TSM reported this morning that really didn't have an effect on the market as, the squeezing just kind of overtook everything. But just a little bit of a micro red flag there moving forward. IGV, again, reversing just like everything else, up 1.39% on the day. But again, hourly, well, I'll show you the 10-minute here. 10-minute, you made a slight higher high, but still kind of lagged a little bit. So I want to see these risk on sectors really start to bid up, and we didn't really see that here today. So a little bit of a red flag from the semis and cloud software. Dow Transports had a nice reversal. This held up really well. It did have one really good sell bar in the open, and then we had a nice power move into the close, finishing up 1%. Just peaking above that trend line. So you got a chance to confirm above that trend line tomorrow. But again, with that big move, I wouldn't be surprised to see a pause or a pullback tomorrow in this market. But now that does put that 13,000, 13,100 handle back on the table here for the Dow. And then if you get up through that, maybe gap fill 13.5 would be your next stopping point. But again, a nice little move there for the transports off of the lows. We talked a little bit about interest rates. Again, 10-year up 1.25. Same thing with the 30-year there. And really, the big story, though, is the 2-year. You guys need to all be watching this at all times. This is on, one of my screens here, and this is one of the main things I am looking at. But 2-year Treasury needs to, and even if it started to shape up tomorrow, it's usually bonds bottom first before stocks. So it doesn't really, you're going to have a hard time convincing me that everything's all fine all of a sudden just because we had a short squeeze. So anyways, just wanted to make that clear there. So 2-year down, XHB, nice reversal. This actually closed just flattish to positive, up 14 cents on the XHB. But, still impressive reversal, still held that 54 handle and a nice close to close slightly in the green. So XHB up as well. ITB actually closed negative by 2 cents. So a little bit on the weaker side was the home builders. Again, I won't really say that this is the worst thing in the world, but you generally want to see like a 97% up day, and we basically did, but home builders a little bit on the weaker side, so we'll definitely make note of that. VNQ finally VNQ did something nice and had a nice day, up 2%, or just under rather. So a nice engulfing reversal. So this should get a bid, but again, it did, it tried to get a bid last week and it rolled right over. So we'll have to see that weekly close tomorrow. If this can, close up in this range, back above that 618 or in, at or around that, we'll call this probably a good short-term low at very least for VNQ, but finally getting a little relief bid. Still not enough volume there really to get me too excited about it, but it is trying. It's trying to hold that 618, and this thing was wickedly oversold for what that's worth. Moving on to financials. So huge move for XLF, up 4%. This is probably one of the most powerful candles in the whole market today, and a lot of that I think has to do with bank earnings tomorrow. So you're seeing the short covering come on in the morning, and then anybody who was short financials was kind of like, all right, well, we got BAC, JP Morgan, Wells, Morgan Stanley, Citigroup, USB, PNC. So tons of bank earnings tomorrow. Again, you want to be hedged into that, and if you're overpositioned short, I guess it makes sense to be to get out of those positions. So a nice power move here for the XLF, engulfing reversal, just like everything else, and closing right on that 20 moving average. So we'll see what that does tomorrow. Again, resistance is still the same levels, right at this 32.20 area. And then if you get through that, it's that 50 and 100 there on the daily. But again, nice reversal for XLF. Broker dealers, take a look at the volatility here on the broker dealers. The opening candle, look at that surge down and then all the way back up, closing at that 433 handle. So a nice move for XBD. So this may actually go up, and let's extend this trend line. Maybe it goes up there and tags that after all. So we'll be watching that for tomorrow. But again, XBD reversing just like everything else. Crude here up 2% again. Nice little gain for crude. And again, crude's holding up well. Actually, pretty glad I closed that SCO position yesterday. So that ended up working out pretty well. But again, if the market, if I'm right and we still have another leg lower, this will go lower as well. So just be careful with crude here. But again, it held up well. And again, liking that inflation data, as did the XLE. And this was one of the sectors that, this is by far the strongest sector today. Take a look at the XLE. So this is one of the reasons why the VIX didn't spike this morning. You had a gap down, but within 10 minutes, 20 minutes, this thing was turning green and it never looked back. So XLE holding up really well. And that kind of, for the VIX to really crank up, you need everything to be down. You need, and this is a whole sector here. If energy is green, the VIX is not going to be, much in the green here. But a nice pop there for XLE, getting back above that trend line. So we'll see if they can confirm that tomorrow. And then XOP, again, same kind of deal, up 3.66% on the day. And OIH closing at the highs of last week, up over 5%. So a nice pop there for OIH. I actually kind of like this pattern here. So Big move down, big W bottom, and now you're kind of consolidating. You got to pop. If this consolidates more, this can push higher. So OIH in pretty good shape here. I do like that chart right now. Nat gas, again, kind of a nothing burger considering the volatility of the rest of the market, but a 4% update. We'll see if that 20 moving average that is starting to catch up with price gives it some kind of fuel to the downside. But overall, nothing's really changed. It's still kind of just bear flagging here on the daily. Dollar index. So dollar index was red as you'd expect in a market that was as green as it was, but it's still holding up well. It's still holding trend above all 4 major moving averages. And again, the hot CPI print still probably keeping a little bit of a floor in the dollar. And again, it tells me that this is more of a mechanical move in the market, right? Because if it was a fundamental, like a plumbing move, a structural move, right? This should be down a lot more. But, down 75 basis points and still holding trend for the time being. So we'll see. Maybe it can get down to this trend line after all, and we'll be continuing to watch that moving forward. But again, dollar down, just like you'd expect here with the market up. Gold also coming off the lows. So you managed to save that little inside bar low. It was getting hit really hard earlier. And it managed to save that inside bar low by the close. So nice little reversal there for gold. I don't think this is bottomed either. But for what it is, nice little rally off the lows currently. And we'll just leave it at that. Silver, same kind of deal. Although it is losing that inside bar low here. Let's take a look. So that is 1898. So unless we get a big rally in the next 50 minutes before the futures roll over, that will have failed. So silver might be a little bit vulnerable here as well. But again, did finish off the lows. Just like the rest of the market. Platinum, nice surge there. That's actually green. This is the strongest. Remember, I've been telling you guys this for probably really months now, that platinum is the rock star of the precious metal sector right now. And that finished up 2%. Meanwhile, gold and silver are both negative, although finishing off the lows. So platinum, nice move there. And then palladium down 1.31%. But it did hold that 100 moving average and finished off the lows. So a nice little recovery there. And copper as well. Now hammering on... Let's extend this out here. So it's now hammering on that top side trend line. If we can get above that, copper can make its move. But for right now, just kind of hammering on that and really just kind of in standby mode for the time being. But a nice reversal there for copper. So we'll just leave it at that. And then Bitcoin, lastly, this has been such a... so we've been talking about this trend line. And this is, you can't make this up, right? So this morning, I want to show you the intraday here. Let's look at we'll just use a 15-minute. So this was down... pre-market. This was down. It started dumping at 6 o'clock in the morning. And then it got that little bit around the same time the BOE released that news, and then CPI it dumped. So Bitcoin was almost kind of a leading indicator this morning, as it was down, whereas the futures, the E-mini was actually up during this period here, and Bitcoin was a little bit of a leading indicator. Then, of course, it bottomed when everything else did. And just take a look at this stinking trend line here. So we've been talking about it. We had the breakout, quote unquote breakout, last week on the 4th, and then it's just really hugged it. We couldn't confirm it. We couldn't get above this candle, and we just hugged it to the downside. So it's like down sloping, but staying above the trend line. And then look at the low of the day, almost to the penny, right to that trend line, and a nice little bit off that with some good volume. So again, Bitcoin, it's trying here. It's trying. We'll give it credit for now. It's holding up okay. The rest of the crypto space really kind of flattish, but Bitcoin is leading, which you would expect in a high volatility environment when there's lots of volatility across the board in the market. But again, everything's really kind of the same here. If we can push up, you can still get it back up to that red bar high. But for right now, you did back test that trend line there, and you got a nice bid off it. So we'll give Bitcoin the benefit of the doubt for now. All right, lastly, back over to the spiders. So this is a power reversal. Let's not call it anything it isn't, but structurally, there are problems in the market still. 2-year Treasury, no capitulation. Good volume, but not capitulation volume. And like certain sectors, like ARC, just still weak. I don't like that. I don't like the semis not being able to follow through intraday. So a couple of red flags here moving forward, but you have to respect this market. And again, I'm pretty much neutral. I'm in mostly all cash right now. For the most part, not very exposed to anything currently, but I am not convinced that this is necessarily a bottom. And you might say, well, how can this, look at that power candle. Like, they're not just going to be able to take that out. Maybe not in one day, but we still have geopolitical issues going on. That can cause some serious problems. Again, the 2 years is telling us that this is not a bottom. And when you have increased volatility like this, by the way, increased volatility, aka the VIX is still above 31. we can make these types of moves and we can fade this rally. So don't think for a second that can't happen. We're not out of the woods. Do not be a cowboy in this market just yet, until we have a little bit more clarity here. Anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.